Hello, good morning, everyone, and I welcome you to this second panel. I think this should be a very exciting one. As we said yesterday, it's time to leapfrog, it's time to fly, and I think Uganda is ready. So the topic today is very, very interesting. What is the role of government and corporate institutions to unlock early stage investing in Uganda, okay? And we have an incredible panel up here. So I really hope this is going to be very, very exciting. Now, we do have one flaw with the panel that we have on stage. And the flaw is that we don't have any female. So we're just owning up front and apologizing because, yeah, for different reasons. But anyway, still we're going to make this really, really exciting. I think David already did an introduction. So in terms of, you know, the roles and titles of everyone. So I'm going to just try to jump straight into the discussion, and I'm going to also try to tie in why each individual is here. So I'm going to start on my left side here with Joel, and have Joel maybe just introduce himself very, very quickly, and I'm going to tie that into the topic for today. So Joel, please introduce yourself.
All right, thank you. My name is Joel Muhumuza. I'm the CEO of Flyhub. Flyhub is the technology subsidiary under Stanbic Holdings, Uganda. So a few years ago, Stanbic realized that we could do more in this economy, that there was more to be tapped into than just the bank. And so we portioned off 4 subsidiaries, one of which is an incubator, Stanbic Incubator, that incubates businesses primarily for the oil and gas sector, but also expanding to different areas, including tourism and agro-processing. We've got a real estate arm as well that manages a number of properties and does brokerage services, a wealth management arm, and then myself. I'm not usually in a suit, so if I look a little bit ill-fitted, it's because I'm usually a tech guy. And what I do really is I'm building API and cloud-based infrastructure for a lot of the fintechs that want to partner with the bank or want to come into our ecosystem. So we're looking at creating infrastructure to enable the digital future of our country. Thank you.
Awesome, amazing, amazing. Thanks, Joel. And a lot of what Joel is talking about and what he will talk about is the role that a bank is playing to essentially enable the startup ecosystem. Okay, thank you very much. Then I'm going to move to Apollo. Apollo, please introduce yourself.
Thanks, Bunmi. My name is Apollo Mwanje Mbazzira. I work with the Private Sector Foundation Uganda. So for you who may not know about PSFU, we are the voice for corporate institutions and associations in our country. So since 1995, we have played the role of supporting businesses and business associations in our country, close to 300 business associations, in advocating for a competitive business environment with government. And we're working with a number of partners, including the Ministry of Finance, Ministry of Trade, the World Bank, CEDA, UK government, representing a number of sectors, about 13 different sectors. So I'll get into detail as we get into that discussion. Thanks.
Right. Fantastic. And we're going to ask him a lot of tough questions, right? Because there's lots of corporates in Uganda making a lot of money. And then there's a lot of startups who don't have a lot of capital, right? Why? So I'm coming back to you, Apollo, shortly. So now we're going to move to Kgathatso. Please, can you introduce yourself?
Good morning, everyone. And again, thank you for having me here. I'm Kgathatso Tlhakudi. I'm the technical consultant to African Renaissance Capital. It is part of the Thabo Mbeki Foundation. In ARC, we are primarily looking at investments whose proceeds are intended to ensure sustainable funding of the foundation going forward. Until recently, until June this year, I was the Director General of the Department of Public Enterprises. It's a shareholder department of some of the big corporations, state-owned corporations in South Africa. ESCOM, which has been, was until recently, a strategic equity partner to the local utility, Transnet, which is in ports, pipelines, as well in rail, and a couple of other entities in the interest of time that I will not mention. Thank you again for having me.
Thank you so much, Kgathatso. I really appreciate that. And of course, I don't know if you heard it, the Thabo Mbeki Foundation, and also the fund side of it. So I think we're going to have a lot of interesting conversations, especially from the standpoint of South Africa, you know, and the big fund. We all hear about the PIC, right, which is a massive fund in South Africa, and essentially, how do we replicate that here? So awesome. So now I'm going to go to Stevens. Stevens, can you introduce yourself, please?
Thank you very much, Bunmi. Good morning, ladies and gentlemen. I'm called Stevens Mwanje. I'm the CFO of NSSF. As most of us here know, NSSF provides social security and retirement benefits for Ugandans. Our size now, we have a pool of around 5.4 billion shillings in retirement funds. That's about 20 trillion Uganda shillings. Basically, we do quite a bit in the economy, for the Ugandan economy, and that's a story we're always happy to share. Thank you.
Awesome. Thank you so much, Stevens. And Stevens, if you didn't hear that well, from a startup standpoint, looking for capital, this is your biggest fund that's sitting in the room, right? And then also for fund managers who are looking to deploy in Uganda, perhaps if you do a little more Ugandan investments, maybe you can hit Stevens up for some capital as well. So we're going to come back to you shortly, Stevens. So now I'm going to move to James. And James, with the UDB, would like to have you introduce yourself, please.
Good morning, everybody. I'm James Otto. I'm very happy to be here today. I work in UDB as the Senior Investment Manager. UDB, we do a lot of things, but specifically our priority is to intervene in sectors that have a lot of socio-economic impact. But for the purpose of today, we do support and we do invest in science, technology, and innovation. We also participate very actively in private equity and venture capital. But I'll talk more about it as the discussion moves on. Thank you.
Fantastic. We're done with introductions. Let's jump right into it. And I'm hoping that I do a good job of asking very, very tough questions. If I don't ask questions that are tough enough, then I want the audience to challenge me. So I'm going to start with the first question. And the first question is, essentially, in America, I don't know if everybody knows the statistics, but essentially 90% of capital that goes into innovation actually comes from public entities, pension funds, Department of Defense, and essentially government-linked entities. The day I saw those statistics, I was shocked, right? And if you take that further with examples all across the world, we start with South Africa and the PIC. The PIC moves some cash. You go to Saudi and you have the PIF. The PIF moves some big cash, right? Then we move to the UAE and you have Mbazzira. Mbazzira controls a lot of capital. Then I move over to China and I have a lot of the state-owned banks, right, or state-linked banks, and I believe 95% of Chinese investment into Africa is actually controlled by these banks. Now let's come back home. Stevens, I'm going to put you on the spot. We are not seeing your hand. I think that's how they say it in Nigeria. We're not seeing your hand. And we understand that you are the largest fund for Ugandans, and we're not seeing your hand. So tell us if you're doing anything. Let's move this money. Am I speaking for the public here? Yes.
Okay.
Yes. Please give me a round of applause if that question was solid. Thank you. Thank you. Thank you. Thank you. Stevens.
Well, so Bunmi, before you start chest thumping, I think I should first take one step back before we move on. Like I said, what we hold are retirement funds. So the first step about dealing with retirement funds is the word safety, because we can't lose them. You have to remember there's someone else who is seated in that audience clapping right now, whose funds have to be safe. And all investments have to be well governed and safe. But having said that, it's not actually true that we are not seeing our hand. Probably we just have to do a little bit more chest thumping than you've done to show you what you have done. When I've sat around and I listened quite a bit, and one thing I noticed that all the people who are here are kind of looking at the businesses, at funding businesses that have already established themselves, that they are already to scale. But those are very few in Uganda. But who is looking at the base? Because we have to have the base, and that's where NSSF has come in. Because what we have done is that we've partnered with MasterCard Foundation, and we are looking at seed funding, the small and growing businesses. And we have been doing this successfully for the past 3 years. We have a target of to start with in the first cohort, around 500 of them, to train about 75,000 entrepreneurs, looking at the business hubs, which are the ones which support the businesses. We are deliberately growing and training them across the country. They used only be in Kampala. Everyone is concentrated in Kampala. We have made a deliberate effort to make sure that we grow these across. And what we are doing right now, we are giving what we call seed funding to catalyze their businesses, to make them investor ready, so that now the partners who are here are able to fund them. When these kind of businesses go to the banks or go to the financiers, they are never looked at. We give them the base, and that's where NSSF has for now concentrated. We can share, we've had quite a bit of success so far. We have rolled out over now 200, about 200 of them, where they are employing around 110,000 Ugandans. We have trained and grown about the support groups around 16 across the nation. And we are continuing. We'll continue scaling as and when we move on.
Awesome. Thank you very much, Stevens. And I think Stevens is saying that we should be seeing their hands. And I think some of the things that resonated with me with what you're saying.
Because we are looking at the future.
Yeah.
Because most of the people who are now are dealing with what is here now, but we are looking at the future. We want what is the future of the business in Uganda. So if we do not support these businesses, the people who, the young, or even if they are young or old entrepreneurs who are willing to grow, to take that jump, and they are at that stage where the banks and other financiers are not in the position to give them money, NSSF is taking the risk on this, so that then they can be able to scale their business.
Fantastic. So I think what Stevens is saying, I see a lot of sense in that. And maybe that comes back to what we said yesterday about the iceberg that you don't see. The idea is that as a lot of these early pre-seed investment you're making is coming out, in partnership with MasterCard, hopefully the VC community will start seeing more pipeline that is ready as a result of the work that you're doing. So fantastic, and thank you for that. But my second question is that, okay, we understand that you hold the money of Ugandans and you need to hold it safe. We hear you in terms of this risk capital that you're bringing in that we're going to be seeing. But my second question for you is to also challenge you to say, obviously, you can make these investments into these small, tiny companies, but at the end of the day, you're a huge company. You're a huge, massive organization, and you can't reach everywhere. You're not investing through funds, right? So there are funds who have the structure, who have the infrastructure to find deals and invest in deals. And when you see Mbazzira, PIC, PIF, they actually also invest through other funds. So on behalf of the audience, I'm going to ask that why are we not seeing your hand as it relates to investing through funds?
Thank you, Bunmi. And that's basically, that is the second step we are involved in right now. Because we realize, yes, when you give these small companies seed financing and then they are ready to scale, then what? Now we are moving into that next phase. Right now we are talking to so many, quite a couple of credible partners, both in Uganda and in the region. And what we are going now is now to help the businesses to scale. Because if we have been saying that we give you seed capital of say $20,000, now we are starting the next cohort. We have a cohort which we are giving 75,000. They have scaled, they have been ready to scale. But with the partners we are working with, we are looking at funding these businesses up to $200,000. So we are going to be working with the likes of Jones and UDB. We're already working with UDB actually to help them scale. Those businesses that have been incubated, they can have a direct line to go to UEB and get some development funds. But we are now growing this. This is something that should be done by the close of this calendar year. We should be prepared now to be able to move to that next step.
Fantastic. Please, let's give Stevens a round of applause. What I'm hearing is that they're going to start also working through intermediaries and working through other funds. Example with Joel here, you know, an example with UDB as well. So this is great news. He also gave a timeline. So that is really fantastic. It couldn't, I don't think that applaud was loud enough. Otherwise, please, let's give him a round of applause. You know, fantastic, fantastic. So I think I'm going to move to James with my next question, because James is also kind of linked to development, linked to government, and the statistics I mentioned earlier, I think is also very, very applicable. Now, obviously, UDB is a development bank and focused on developing the ecosystem. And really, my question is, considering the lack of, you know, deal flow that some of the investors are talking about, you know, considering the lack of, you know, enough activity from state-linked entities in terms of bringing in the local capital. You know, yesterday, one of the discussions we had was the fact that if global capital is going to come, global capital is always very interested in saying how much capital has been deployed by local HNIs, by local pension funds, by local development banks, because the investor is not here sometimes, right? They don't have boots on the ground. So they want to know that they are following on local capital that has put their money in. The question is, why is UDB not doing much? They're saying they're not seeing your hand either. So please go ahead, James.
Thank you so much for the question. So UDB, we're actually doing quite a lot in the space of startups, in the space of science, technology, innovation, and we are doing along the lines of both data and equity. We have areas where, you know, we want to focus our interventions, These are the areas where we believe if we put in our funds, we shall be able to unlock, the maximum impact. Things like productivity acceleration, things like industrialization, things like creating more jobs, things like opening more markets. It's along those lines where we are actually putting our intervention. We have made a number of investments as we talk at the moment in the private equity space and venture capital. Our total commitment really is it's around 35 billion. So that is and that is just the beginning. We are still having commitments to continue putting in more funds along this line. Now, besides investing directly, we also have other services that we do provide that is complementary to the financial products that we have in the market. We have something we call business advisory, where we try to work with enterprises to de-risk the ones that are coming in, and then also to ensure that there is sustainability for the ones that we have put in resources. We also have something we call project preparation, where again we use some bit of seed capital to try and de-risk the projects to be able to attract the lenders that ordinarily will not be able to find these projects ready. We have instruments that we deploy. I spoke about the private equity, but we also have debt, we have structured finance that we do give to these enterprises. So yes, we have done a lot, but it's just the beginning. Our appetite is increasing. Our interest to deploy more funds in the startups ecosystem, in STI, is really, really up. Yes.
Thank you. Thank you very much for that. And what I'm hearing is that UDB is already deploying different instruments, debt, equity, quasi-equity, private equity, all of those type of things. But let me ask you this. These investments, are you making them directly into these different companies? Obviously, you have an industrialization agenda. Are you making that directly? Are you making that through other funds? Can you answer that question, please?
So if you look at the market at the moment, there are, I could say there are two channels through which startups can access funding. The market is dominated by fund managers, whether you're looking at pension fund like NSSF, whether you're looking at private equity, venture capital, growth equity. These are all GPs that capitalize, and they are basically managing the fund for the startups to access this money. Now, what we are providing in the market is an alternative way through which startups can actually access funding. The reason we do that is, first of all, we are very selective about the areas we want to participate. I spoke about that we only want to invest in sectors where we believe we are creating a lot of impact. Number two, because we have complementary, what we call the non-financial instruments, we find it easier to administer these instruments directly rather than through the funds. Number three, we have preferential terms. If you look at the terms under which the startups can access the facility, if you compare to what the market offers, if you compare to what the fund manager offers, we are not just competitive, we are almost below what they're offering. Now, if we move through a fund, there is a markup cost that is going to arise, and this markup cost is going to be transferred to the final beneficiary, who are basically the borrowers. So we try to make sure that the cost of borrowing remains as minimal to the extent possible by reducing the intermediary cost of financing. Yeah. So we believe by us focusing on investing directly to the startups, we are able to give them really competitive rates. But that doesn't mean that investing in funds is a bad idea. Like I said, really it's because funds brings economies of scale. And the market really, over 90% of it it's really fund of funds. Yeah, thank you.
Fantastic, fantastic. Thank you so much, James, for that. And I think your point is really very, very interesting in terms of the development angle, the better rates that you bring in, and so on and so forth as you make this direct investment. So I'm going to go over to Joel. Now, we all know Stanbic, you know, which is part of the Standard Bank Group. I think arguably one of the largest banks in Africa. And essentially, you are also coming in as the technology arm, you know, for Stanbic. I have two questions for you, you know, and the first question is, the perception typically of Uganda is that there's not enough investable technology companies, right? I think there's not enough investable technology companies, digital companies, right? That's the perception, that it's really more of the real economy only that exists here. As a tech person, as a tech venture builder, investor, as part of the largest bank on the continent, I'd like you to speak to, you know, that particular perception. And then the second question I have for you is around the comment from James as well, in terms of these state-linked, you know, entities, development entities, should they only be investing directly or through funds? Which one is most beneficial?
All right, thank you. So there's a gentleman in the audience, Mr. Wavamuno. I want him to stand up just for a moment, please. That man with an afro is part of the board of FITSPA, which is the Financial Services, I don't know, association, right? So they are putting together a number of the fintechs, a number of the technology providers. And the reason I wanted him to stand up is if you don't talk to him, you'll have come to Uganda for no reason. He's at the heart of the engagement with government in terms of even crafting a policy for how fintechs are going to be guided. One of the big issues that we had here was you could just come and build anything, and you could hold people's money. And if you look through our press, we had a number of initiatives that came through that were basically Ponzi schemes. So what you might be seeing and what you might be hearing is sort of echoes of the old world of where Uganda was. But I'll tell you that the reason I'm sitting here is Stanbic, with a very large balance sheet, decided it was not enough for us to just focus on the real economy, quote unquote, but to look at what the enablers of the future are going to be. So fintech is the future for us, but we don't know enough to do our own fintech. So why I exist is to build that layer where there are certain things that a fintech can do really quickly, you know, scale really fast, get wallets done. But what we have is infrastructure. We can help them with anti-money laundering, would help them with counterterrorism financing, would help them with cross-border remittances. The fact that we can grow only through partnership is where I see the big connection. I'll give you two examples of where technology is taking us now. The bank, just as Stanbic Bank, if you look at our unique count of users, of customers, is just 3 million. Through FlexiPay, we decided to create a mobile wallet which would sit on people's phones, and it's at 700,000 now. You don't need to have an account with us, but you can do free transfers. We did that for two reasons. One, to do financial inclusion and understand where everyone is, we needed to be on people's phones. And mobile money in East Africa, I'll tell you, is it's a big bonanza. East Africa is the mobile money market. The panel before was talking about the size of Uganda's economy. Our GDP is at about 45 billion, but the East African economy is at about 165 billion. Now, if you look at Uganda on its own, it's not a very good place for you to invest. But if you look at the cross-border flows, if you look at the foreign remittances coming through here, this is where growth happens. And from my time in the US, I think a lot of us look at the US as, you know, the Wild West and where a lot of things happen. Sometimes I get bored with that narrative. But the one thing that I challenge a lot of us, and I would challenge the people in this room, is we are tempted to look for an easier path for scaling. But this is where growth is going to be happening. We've got a very young population. We've got growing sectors. The oil and gas initiative that's coming in is going to need a lot of investment in technology, and that's where we're positioning ourselves. It'll be too late when you see the benefits, when you see the potential. It's now when you meet the organizations that are here. The fact that NSSF is here, the fact that I'm here shows that we appreciate that there is something actually going on. So from the technology front, you'll start to see the ripple effects coming through eventually. I also want to make one more point. I know the minister is not here, but from the government side of things, there's something I learned in my MBA class, which was, it's called the shield of boring. And there are certain things which you start talking about that are really so boring and people's eyes start to water. But those things matter. And one of them is, for instance, government procurement services. One of the things I've pressured government about is how do they procure financial service systems or technology systems. Those procurement laws reflect old world thinking. One of the things that could easily be done is the right to repair. You purchase some software and you have the right to have people in local nascent industries do some repairs. That gives someone, you know, a starting point where they can have a contract to do work for the government. Oh, I see the Honorable is here. Maybe they'll record some of my comments for her. Yeah, so thank you for coming, Honorable. One of the things I'm talking about is how government procurement happens. I think there's something along the lines for all the government systems that are being built to have local contingents do that. Let's build Uganda by buying Uganda and also allowing us to fix and enhance systems that are built from outside Uganda. The last comment I'll make on that is just around the difference between technology and the rules of technology. So the tech part is always easy. It's the rules around it. If you try and look at the richest men in the world right now, and they're all men, from Elon Musk to Mark Zuckerberg to Jeff Bezos, all of them don't earn profit. They earn rent. Anytime I send an email, Bill Gates is getting something. Anytime I go shopping, Jeff Bezos is getting something. So when we look at it that way, if we don't own the infrastructure, the tech upon which products are going to be built, we are always going to be chasing our tail. So that's why instead of us becoming a tech company that's just doing products, we looked at infrastructure. So my plea here is, as we're building this infrastructure, the companies that are going to be invested in by these gentlemen will have rails upon which they can run. Now, to your last question about whether they should be invested, I really think there should be some diversification of that investment. Why? If you look at the NSSF High Innovator, we are sort of upstream from them in terms of the incubator teaches some of these businesses governance and gets them ready to go to High Innovator to make some money. But the unfortunate thing is they get really small ticket sizes, these really small amounts. And what ends up happening, maybe the next time we have this conversation, we should have a certain party that is influencing how that happens, and that's the NGO sector. So NGOs are providing a lot of impact money at a low rate or even at a zero rate. And what's happening is then the businesses that should be learning, you know, how to be competitive, how to, you know, actually get funding that's going to put you with some obligations, they are usually the ones winning grants. And I think as a policy, we need to think about who should be getting grants and who should be graduating out of that grants level. Because if I'm competing, say, in the SACCO business, if I'm competing with another person who's getting a zero-rated grant, my pricing is not going to be reflective of what it actually costs to do something. And I think that's where we can see the private-public arm where we're saying, no, we want you to actually pay back this loan. You know, put a squeeze a little bit on the entrepreneurs that are coming through. And then maybe people like me. We had a chief investment officer in the bank who used to say that it's a crime that we keep telling young people to become entrepreneurs. Because the panel before he had really said that you're not going to get a lot of investment if you're 23 years old. You have to be genius. At 23, you have more courage than brains usually. But are people like me quitting our jobs to actually go and start those companies? We're not, because we're looking at the environment and saying, I would rather get a steady paycheck. So things like this where you have pathways and infrastructure are more likely to have outside business interests where I'll be able to, you know, pivot and take my experience to start a company. Yeah.
Fantastic, fantastic.
Thanks, Mubi. Can I interject? John, thank you very much. I got interested in something you said that after incubation, there should be other organizations that should help these young entrepreneurs to scale. So probably, I know we have been trying to work with UDB, Equity Bank, and ABI to make them ready. What is Stanbic doing in this, in this to help these people to be able to access capital. Because ideally when a person walks in the bank, they ask for so many difficult things for a young entrepreneur to be having at that particular stage in their life. So how is Stanbic helping?
Yeah, that's a good point. So I think I'll make 3 comments to that. Number 1, imagine you're a startup and you walk in to meet the credit manager, and I've got a pot of cash where I could invest in government bonds, which are almost risk-free. And then I've got a large-scale investment coming in to do some infrastructure. And then there's you with a very nice story, but am I really going to be rewarded for taking the risk on you? So that's why we have these other subsidiaries. We have the incubator that's meant to create them in such a way and streamline them so that they have 3 years worth of experience, and then they get preferential funding. So we have a small pot of funds where they get that kind of funding. We've also been able to partner with our gentleman here, UDB, sorry, to be able to see how can we help put some money into the fund that they have. But more importantly, I think for us, we are not likely to be the ones that are going to do early stage investment. The returns that are expected of us are quite high. Last year, the bank made $1 trillion shillings, the first time in history. I'll pause for a clap. There was no clap. Oh my God. Anyway, so, and the reason we got there, now you understand shareholders are expecting a much larger return, but our responsibility in the market is to create an enabling place. And our enablement is through the technology, it's through the free business advice that we provide. We've also got a wealth management arm, which can allow you to be able to put those funds together. But I think we're looking at the much broader ecosystem. As a bank, we really can't do that much. What we can do is help facilitate the transactions that are going to be happening and open up our services to these startups. The other thing I'll say is, as a region, East Africa region, Stanbic Group is looking at bundling different ecosystems so that we can facilitate cross-border trade. I don't think you can scale in Uganda alone. It might make more sense for you to start Kampala, go to Nairobi, and then eventually with that money come back in and start looking at the other towns. But how do you get yourself set up in Kenya? How do you get your accounts happening? We're doing borderless banking, for instance, so that you don't have to move from one place to another. It's small steps. For me, it's often frustrating because the technology is available. It's just the underlying rules that have to be changed. But when there's demand like this, so for instance, I'm recording all of this so that I can take it back to my people and say, well, there are hungry people ready to invest. We have no excuse to say there is no demand. So yeah, challenge taken, sir. We are doing something.
Thank you, thank you.
Thank you for that. Please, let's give them a round of applause. And thank you, Stevens, for challenging Standard Bank. That 1 trillion, you know, let's share some of it here, right? You know, so no, I think this is great. I like what he's talking about in terms of the FinTech Association. Right? That's big, right? I know people like Eric and a lot of investors in the room, Launch Africa, that are saying, hey, is that infrastructure and that regulatory framework ready? For example, if there are companies doing, you know, blockchain, crypto, who are doing, you know, digital banks and things like that. And I think a lot of what Joel is talking about is the time is now. They're already doing it. Right, with this fintech that has 700,000 accounts compared to the 3 million that the whole bank has. So I think that's very, very interesting. The procurement laws, I hope we capture that part of the recording. I think we should play that to the right group. But that local procurement law, I think that's a huge, huge point that you made as well. So now I think I'm going to go to Apollo. Now, we heard his introduction earlier as the private sector, you know, foundation. Now, what that means is that all those big corporates that are making $100 million in revenue, $50 million in revenue, all those, you know, families that own these conglomerates, the Indian companies, the Chinese companies that own these big corporations in Uganda. The question is, what is their role, right, in investing in startups? What is their role in investing in STI? Maybe they made their money from mining. Maybe they made their money from manufacturing or distribution. They take that capital and they keep it to themselves, right? when we look at other countries and you think about, you know, corporate VCs, CVCs, right? When you think about even the successful companies we know today, the Google, the AT&T, the Vodacoms, just the big corporations globally, the share of corporates investing in innovation is very, very significant. And when you come to Uganda, it seems like nothing is happening. So, as the association that brings this group together, can you speak to us a little bit about, is there a role that you have to play? And is there anything you guys are doing? Because if the local successful industrialist in a country is not mentoring and investing in these young people, right? Why should Nella come here and put her money in that startup, right? When she's not sure that there's somebody mentoring this person, why would they put their capital? So Apollo, I'm sorry, we're putting you on the spot here.
You have actually. I thought we had agreed that all the tough questions would be directed at Stanbic and NSSF. Okay,
but changed the plan.
You've changed. They gave you something small. Okay, so back to your question. I think there's a space for corporate organizations to play a role in supporting all the budding startups that we see surrounding us. And you gave a fantastic example of some of those geographies, geographical locations where this is happening. It's not happening in Uganda, but maybe the time has come for that to happen. Within Private Sector Foundation, we have an ambition to set up a private sector catalytic fund, a $1 billion private sector catalytic fund.
Wow, please, let's give a round of applause for that. Sorry, can you repeat that? I'm not sure that we hear that well.
Okay, so at the Private Sector Foundation Uganda, we have an ambition to set up a private sector catalytic fund worth $1 billion. And we have already started moving in that direction with support from the MasterCard Foundation. They've given us a lot of support to craft this vehicle, so the vehicle is ready and investable. We have an anchor partner that we are negotiating an investment of close to $300 million. And then comes in people like Muhumuza here. He talked about the 1 trillion. Was it a profit? I want to hand him a pen so he can write us a check. Because this vehicle that we've set up, corporates like Stanbic and other large corporate entities in our country should indeed consider channeling some of their profits to this fund, which is going to be a fund of funds, okay? But I believe there's also a role for policy advocacy that we will play as a private sector foundation to ensure that the private sector companies or the large corporates that decide that they are going to channel some of their profits towards this vehicle receive a tax rebate of sorts. So that's our role. The good news is that we'll be meeting with the president, I think, on the 23rd of this month. We are happy to go with a position paper on this matter because it's a serious matter. And actually, it's you who raised it to the president the other day. So we'll take it to the next stage. Honorable Minister is here. I'm sure we'll get her support on that matter. So it's a policy paper.
Please, a round of applause for that.
Yeah, it's a policy paper. Any of our top 100 corporates and taxpayers, they can get a bit of breathing space to contribute some of their profits to this fund. We will work in partnership with other funds, because it's a fund of funds, to channel that money through them so that this money goes to SMEs that have been tried and tested a little bit by Stanbic or by NSSF or by UDB. We'll have different ticket sizes from $10,000 right up to $3 million for the big boys and girls, as it were. So yes, the corporates have a big role to play, and we'll open up that space as PSFU to bring them in. Corporates also have a very big role to play in ensuring that, I think Uganda has reached a point where partnerships can now we can now start talking business-to-business partnerships. Some of the big corporates out there are hustling with stuff that some of our innovators are already doing here. So they should be moving around and signing B2B partnerships with these innovators.
Absolutely.
So that they begin to let go of, if I may say, they should not be sweating the small stuff. If the innovators here can do that, they should now begin to let it go. And they may be focused on bigger ticket items. Maybe just one last thing for you to know. Close to 6% of Africa's population now lives and does business in East Africa. Now, that number is set to grow. And so if we are to talk about us showing our hand is going to grow in Africa, okay? And I kid you not, the next time we meet here in 2024, that number will probably have grown to 10% or more. We are growing to become one of the leading trading blocks, not only in Africa, but in the world, okay? So what does that mean? Corporates have a big role to play also in ensuring that they spread their reach beyond the hubs that they've set up in the city to some of the towns that are bordering countries around like us, like the DRC, South Sudan, Kenya, Rwanda, Burundi, and set up hubs there. And these hubs can be used either by themselves or by the innovators that are around us to start moving product to these places. That's why at PSFU, part of the effort that we will commit to this catalytic fund is to make some of these businesses export ready or even investment ready, where the ticket sizes that we're asking, that we're giving out are higher than what they can handle. Some of our partners around us can start working with them and build a pipeline for us, and we take them to another level, and vice versa. We should also be able to build pipeline for some of the partners that we have on the platform here. Thank you.
Fantastic. Please, round of applause for Apollo. There's so many announcements that's been made on this podium. If we start to put the dollars on the screen right now, I think all you VCs that you think you're coming to Uganda only to spend money, you'll find that you will leave Uganda with capital. And already, please round of applause. Already I'm seeing some hands go up in the public here, so I must take some questions, right? Just because the excitement is very, very high. But before I start to take some questions, and I'm going to need a bit of an extension of a few minutes, because the longer I stay here, the more money, you know, you heard 1 trillion profit, you heard Apollo say, hey, maybe 1% or 2% of that is going to go into this $1 billion fund. You're hearing corporate to innovation partnerships. You're hearing investing in companies here and make them export ready. A lot of really, really exciting stuff. But before I go to take maybe 2 questions from the floor, I want to go to Kgathatso real quick to say, Kgathatso, can you tell us a little bit about, you know, you talk about the Thabo Mbeki Foundation, the incredible leadership in South Africa. We talked about the PIC, right, structure, and then your role as the DG of the Bureau of Public Enterprises, meaning all the state-owned entities. And I believe the secret to PIC's money is the ability to leverage the state-owned asset to be able to to generate the cash flow, right? That allows our guys here to put more capital in. Can you maybe share a little bit about how South Africa did it?
Thank you very much, Bunmi. What I'll say, South Africa is still doing it, and there's a lot of work that needs to be done in South Africa in this regard, in terms of risk-proofing the future. That's what I'm going to call it. Because ultimately, investing in your own country, obviously leveraging those pension funds and other assets that are in the country, is to ensure that you have a future. The pensioners, their children, their grandchildren have a future. They have a country that is functional. what is a better risk-proofing than to ensure that you have a prosperous country? So it's in the interest of all of us to ensure that we mobilize the assets, the funds that are available in the country to ensure that money goes into infrastructure development, money goes into obviously enabling some of the entities that we have seen around here, some of these startups. Because through that, we ensure that obviously the work of government here as a policymaker and also as a provider of basic services is realized. And earlier on, there was a comment made, Bunmi, and I think it was by yourself, about building confidence in the local economy. By mobilizing local capital, foreign investors obviously feel a lot more confident to come into the country itself. I've been in an unfortunate position of having, to support our state-owned companies to raise capital with the likes of obviously the PICs and so on. Obviously for some of the investments that they have to make in fixed infrastructure, it is not a comfortable space to be in. But when the local entity, like the PIC or the DPSA, shows confidence in those kind of projects, the external ones like the PIMCOs and so on are a lot more confident coming in. And of course, ultimately what we want greater activity, economic activity in the country. And those type of investments that are undertaken by state-owned enterprises, obviously to enable the economy, enable that, and able to, obviously, to attract the kind of investors that we have around here to come in, the kind of, obviously, small businesses that are doing the kind of innovative things that we have seen here. Some of the points that, if you may allow me, Bunmi, that I would like to make is that government is also a shareholder in public enterprises. The comment was made earlier to say, why can't some of the profits from private entities go towards the kind of funds that have been spoken about here, which are obviously intended to ensure investment in these startup entities. I'm saying state-owned companies are much better positioned to do so. And government as a shareholder has the responsibility through whatever compacts they have with these entities to direct that some of the profits that these entities are making, that they be directed into these kind of funds. And of course, that will be through encouraging or rather lowering profit expectations so that these entities can put money into enterprise development and supply development. And you need to have a private sector manager or public sector managers with a conscience. They need to be incentivized accordingly to ensure that they leverage the asset base that they have through obviously their management of these state-owned companies to ensure that those are leveraged to attract funding and that the funding get invested in obviously in the improvement of those assets. The point that I will make is, for instance, with rail companies, they have servitudes on which these rail lines obviously are built. Neighboring in those servitudes, you have an opportunity to build all kinds of commercial and residential accommodation, and through that you don't only enhance obviously the value of that asset, the servitude, but what you also do is you obviously attract economic activity closer to those particular corridors. So those are some of the things that government can do to leverage the assets that is under its control. And as just repeating the last point I made in the beginning, when we do this, we are risk-proof in the future. There used to be something called the license to operate. As business, we are in business because society has allowed us to be in business. The least that we can do is invest in the future of all of us. Thank you.
Awesome. Thank you so much. Please give him a round of applause. And I think this ties to one of the recommendations from yesterday, where we talked about a lot of what we've been talking about, the recommendations yesterday. Really, some other countries have done it already. So this idea of being able to partner take a learning tour, right? Imagine the head of the state-owned entities taking a learning tour, you know, under the guidance of Kgathatso to say, hey, what can we learn from how you did it in South Africa? How do we implement it here? And we catalyze the local economy. So very, very exciting. And I also like what Apollo said earlier in terms of, you know, really how do we bring all these, you know, corporates together by using a white paper, right? And I really think, and I'm going to pose this a question to the global investment community here. Are you willing to form an association, say for example, association of foreign venture capitalists coming into Uganda, for example, and contribute to this white paper, right? Because ultimately that allows them to take some of this money, you know, from Joel, from Standard Bank, right, to create this fund of funds. So I think it's really, really exciting. So please, can I get the mic into the hall? Let me take 2 or 3 questions if I have 5 more minutes. Please, okay, the first question. Please introduce yourself, your organization, and ask your question.
Hi, my name is Philip with Catapult Africa. We're a venture capital firm based in Kigali. My 2 questions go to Joel from PSF and the gentleman from Stanbic. Joel, very exciting to hear about the 1 billion that you're looking to. You can see to your left, the gentleman was excited that Stanbic finally crossed 1 trillion. It's difficult right now when you look at Stanbic. They have a loan book of about 1 billion, and it's taken them a while. Could we get a commitment from you to, by end of year, start with 10 million and then grow that one? Because little steps make progress. And to you, sir, you mentioned that you don't go down early because your shareholders are expecting results. Everyone kills the golden, those who kill the goose that lays the golden egg realize that soon the rainy day comes. And I think you've made a point where you said banks have innovated. I would like to say I see banks have digitized rather than innovated. And I think there's a space for you and your board to plan for that rainy day. One of the companies we saw in South Africa that did this very well was Naspers. Naspers was a media company. They made an investment in Tencent of 30 million. That 30 million became billions, and the rest is history. And I think there's a role that corporates have, such as yourself and your members, Mr. Joel, to be able to give access, not necessarily to buy the technologies for self, but to give access to work with the startups and invest in those startups for scale. Look at AI coming. What is Stanbic doing? Not just for Stanbic, but for the banking industry in Africa. What are the PSF members doing in the ag space or climate or in whatever technology, not just for here, but for others, for the pension funds? What are we doing? Because if we solve a problem for NSSF, we've solved a problem for every other pension in this market.
Thank you.
Thank you very much.
Thank you very much. Lots of questions there. So let me just take the 3 questions, and then in the wrap-up statement, we will have everybody just answer their piece of the question and wrap up. So I think I need the mic over there. Who's helping with the mic? Over there. Please stand up. Can you stand up? Yes.
Hello, everybody. My name is Sache Jeremiah. I'm a student by profession at Eagles in a senior secondary school. First and foremost, I want to recognize the presence of Honorable Minister and the stakeholders in this great congregation. I have 3 questions to put across. One, firstly, it goes to UDB. Why do you give out loans on a low percentage to Ugandan borrowers, and then you expect high percentage return to the bank through income generation. Another one goes to NSSF. The employees who retire from their careers and who retire from their careers in private sector, why do you take long to give them their retirement benefits in time? Another one is a tragedy for Uganda private sector organization. Why do you always ask support from government, yet people with privilege honors can sustain themselves in different ways? Thank you very much.
All right, thank you very much. I like the fact that we have a student asking some really, really tough questions. I would not want to be one of these panelists today. Can we take a third question real quick? Is there, I saw a hand. Okay, yes.
Good afternoon. I'm Charmaine Hayden from Good Soil Venture Capital here. So as a fund manager, we come to lots of these conferences and there's a lot of people doing a lot of talking, right? It's good to see that there's been some deals done today and that also there's been some collaborations in process. What is really, really interesting to me in looking at whether or not Uganda is a good place to invest is finding out whether or not when you're off stage, you're collaborating in the same way. So yeah, that lends to my question. Are you guys collaborating off stage? Are you participating off stage? And are you reaching out to individuals like myself and my colleagues here off stage?
Okay, fantastic. Let me just take one last one from another foreign VC firm around your willingness or not to create this association and join in the white paper. Can I get the mic? Pass around. Who wants to go? All right, let's give it to Toby. Here. Yes.
Hello. Hi, Toby Oke, V8 Capital. Bunmi's putting me on the spot, but I think I'll go for a question anyway. Question to Steve and I think is it Joel? And Joel, is it Joel?
Apollo.
Apollo, yes. What is your timeline for catalyzing investments? Because, you know, the way foreign investors work is they come, they assess, and they see, you know, should I spend more time here? What are the next steps? So what are the next steps you feel for foreign investors to come in? And this is going to the question about the white paper. Do you want to see a white paper? Or are you ready to actually work hand in hand with people? Do you have areas you want to focus on? And do you have objectives that we can partner with you to achieve?
Thank you very much. All right, that's a lot of questions. So in the interest of time, I would like every one of my panelists to kind of do a short, if possible, 2-minute wrap up sort of concluding statement, and then wrap in that concluding statement any answer or any question that you want to answer. So maybe I start with Joe.
I knew you were going to do that. So one, a correction, our loan book is 4 billion. It's being recorded. The gentleman from Kigali, that was a very strong question, and I take your challenge. Let me just reiterate why I exist, why Flyhub exists. It's for that very reason. The cost of technology is way too high for a lot of the fintechs that we find trying to do operations here. So we've already purchased that technology. What we're doing is opening it up for them to utilize so that you pay just for what you use. Secondly, it's also opening up our clientele. So when I say we're opening it up as Stanbic, it's not Stanbic Uganda, it's Stanbic Group across the continent. Meaning that if you're in Nigeria and you want to do a direct debit transaction for someone who's doing a subscription for a service for you in Uganda, you don't have to come and set it up here. The challenge that we're seeing though is the technical capabilities are still a little bit far away. You know, you talked about AI. To me, the issue with things like AI is not so much the technology. It's befuddling, because when you deal with a large language model, it seems magical. But the bulk of that work is actually being done by Kenyans, who are going through a lot of the gruesome images, who are going through a lot of the information. So when we look at the value chain of where those technologies come from, that's why I talked about the IP. What we're trying to do is figure out how we can get good enough agreements at an enterprise level that smaller entities can utilize. We're not under the delusion that we are going to build all the technology that Stanbic needs to service the mining sector, energy sector, all of those places. Those can be built by Ugandans. Why I talked about the procurement laws is, if I have a procurement that requires me to work with an organization that has done it in 5 different countries, by definition I'm excluding Ugandan companies. But if I can pair them with another established enterprise, they get that kind of build-up. They get the experience to work with us. So it's a very long-haul initiative. Apollo talked about the catalytic fund, but he didn't talk about the fund manager. We manage it for you. To your question about whether we're doing it offline, we really are. I think the problem has always been duplication of efforts. Now we're starting to collaborate, because why am I setting up an incubator space when there are already incubator funds that are going on? So our incubator, for instance, is transitioning into becoming a foundation, because what we realize is everyone is trying to solve the same problem, but is doing it as an individual organization. Things like this are giving me, insight into, someone's already interested in doing that. All I need to do is make it public so that you can come and work with what we're doing. So it's been a learning process, but I can guarantee you, at least for me, I'm working with these gentlemen. Some of them are more cantankerous than they seem, but it's working.
All right, thank you, Joel. Please give him a round of applause. All right, I think I'm going to go to Polo here. Wrap-up statement.
Thank you. I actually thought Joel was going to take all the tough questions. Okay, so Philip, thank you for your question. I'm going to respond to you. I'm going to sound a bit rude, but it will help you. It's going to help all of us who are here as Ugandans, because we need to wake up and understand what is happening around us. A decade ago, a meeting like this was not taking place here. And now what does that tell you? It tells you that things around us are changing so fast, and we need to catch up. A decade ago, I don't think, Honorable Minister, we had you and the Ministry of Science, Technology and Innovation a decade ago, did we? Things around us are happening so fast that if we do not wake up and smell our good Ugandan coffee, we will lose opportunities. So that $10 million you talked about, it exists in our space right now. Even at the Private Sector Foundation Uganda, if you go to our website, you'll find information on financing available to that tune. But here's what I want you to realize. Why we have stepped up our ambition and we're talking about $1 billion is because if I'm to talk about the oil and gas sector alone, and Joel here will tell you, the oil and gas sector, the ambition within Uganda, the investment required is close to $15 billion, and that's just an estimate. So whatever we're dreaming about is a drop in the ocean. We are surrounded by so many innovators. They need to move now. So we are not shy about what we are saying, and we are ready to move today. My request to you is rise up with us, we move together, because our time has come. And if we do not recognize that, guys like Toby here are going to come and take away all our opportunities. We have just launched, no, you, yes, you, I'll take you on, because you tried to take me on. We have just launched a direct flight. We've just launched a direct flight to Lagos with Uganda Airlines. What is that telling you? We need to be prepared. Otherwise, these Lagosians are going to come and take away all our opportunities with our eyes wide open. And so, Philip, my brother, I hear you loud and clear. I hear what Charmaine, I think it's Charmaine, who shared about partnerships. We are working in partnership. I have a very good idea of what Joe has in his pipeline. I have a very good idea what Stephen has in his pipeline. Just yesterday, we were at a meeting with Festo, where we're looking at the pipeline that the High Innovator has under NSSF. We have a very good idea of the innovations that are being showcased here by the ministry. It is our job to take them up for scale. So we are talking, and we'll continue to talk, and I hear you loud and clear. Awesome. I think the other question was from Chisache. We'll go bilateral with Chisache. Okay. I picked up his point here.
Okay, thank you. I know we're out of time, so I'm gonna just like cut it down to like 1 minute each now. Very, very exciting things to still talk about, but Kgathatso, let's have you.
Thank you, Bunmi. My last remarks, I didn't hear any questions coming my way, by the way, is that I'm already looking forward to the next edition of this session. And my sister, who just asked the question about collaboration off stage, I think what you'd want to hear from some of the colleagues here is what did they do between now and next edition to further enhance some of the work that they say they are doing, and obviously, hopefully come with even bigger announcements next time. And of course, to government, I think it's playing a magnificent role. I've really been impressed. It's my first time in Uganda. This has been a wonderful event. I think government as a policy maker, as a cheerleader, as a risk manager has been great. The environment that has been created here has been wonderful. Obviously from the speeches that one had from the ministers and the president yesterday, you are clearly walking the talk, and that is great. And of course, let's leverage the private sector. I've just joined the private sector from the public sector. There's certain disciplines that we can learn as public sector managers from the private sector. Let's leverage those, obviously, in ensuring that we're building a better country for all of us. That's where I'll stop. Thank you, Bunmi.
Awesome. Thank you, Kgathatso. Thank you for that. Please, a round of applause for him. And then we go to Stevens, NSSF.
Thank you very much, Bunmi. Like I said, much as NSSF has the responsibility of making sure that we keep the savers' money safe, but also responsible to being a good corporate citizen who plays a role in the development in our motherland. We have to show that nationalistic tendency. So we have a whole department in charge of innovation in NSSF. And part of the work we are doing, I've already told you. We have a whole department in charge of investments so that they rhyme with where the government wants the economy to go. So that is something NSSF is very, very strong about, and that is not questionable, because we have to be a responsible corporate citizen. Now, to my young brother who's talking about delays in NSSF, and I'm just going to take the Apollo line. I think you have to learn to love your country a little bit more and just not spew out what you are not factual about. As I speak now, we are paying out 75 billion shillings every month in benefits.
Round of applause, please.
75 billion to people who come to claim their funds. So it's kind of very frustrating sometimes someone to stand up and say you are not paying. And you wonder where the 75 billion shillings is going. And in this period, the average is 80 right now as I'm speaking. Now, have we recognized where we are, and are we willing to scale and collaborate? Definitely. Like I said, yes, now we have been dealing with seed funding, but realize that after we have helped these companies to stabilize, to prepare them for the next stage, then we need to partner with the other players in the whatever. I already talked about how we are partnering with quite a number of companies, corporations in the region, in Uganda, in the region. We are in talks with quite a number of big corporates. We are in talks with Stanbic. We are in talks with some of the communication companies. We are in talks with the UAP. And we are going to scale and make sure that probably in the next phase, we should be able to give out up to $200,000 equivalent to the companies that have scaled. And lastly, do we want to talk? Definitely want to talk. Everybody, every organization which has an idea, which is going to help catalyze the Ugandan economy. I mean, it's worth talking to. So thank you very much.
Amazing. Thank you, Stephen. Please a round of applause. And then we have last but not least, James, UDB.
Thank you. I think I had two questions come my way, but one has been partly addressed by Stephen, so I will save that in the interest of time. There was a question on why we are not doing enough for the local enterprises. I just wanted to clarify that in terms of our geographical footprint, our investments are strictly in Uganda. So we don't have investments outside the country. So essentially all the portfolio that we have is really within Uganda. Now my parting thought is this. One of the things that you can see, the theme that is emerging from the discussion here is that on one side we have all these innovators. If you take time and you move around, all these people who are exhibiting, they want to scale up, they're trying to look for funding. And then in the room, we have all these VCs and PEs, and they are saying there are no businesses. But just step outside the tent, and then there are all these businesses that are there. So that means we have a gap. We have a gap in the context that we do not have businesses that are investment ready. And the question here is, what are we doing to close this gap? What is government doing to close this gap? What is Stanbic doing? What is PSFU doing? What is NSSF doing? What is UTB doing? Obviously, we are doing quite a lot to try and close this gap. And the focus should really be on how do we get these enterprises, how do we get these innovators to be investment ready so that they're in position to attract the funding from the VCs, the PCs, and all the people that are in the room. Thank you.
Thank you. Please a round of applause for him. So we would like to close the curtains here. I'd like to ask everybody to give them a round of applause and a standing ovation too. Thank you very much. Thank you.